Hello investors and traders. Today I'll speak about 3 dividend stocks, best dividend stocks to buy right now. This year it may be a very tough year for the stock market. That's why I prefer to receive a nice and stable cash flow and of course great dividend payments. So let's start with the first company for today. It's WP Carey. So it's REIT, Real Estate Investment Trust. Now it's traded about 70 bucks per share. Its dividend yield very close to 6%, and as usually let's start with fundamental parameters. And let's check in fundamental parameters. We see a market cap of 15 billion bucks. The dividend yield forward yield is 5.9%. So this company is an investment trust company which engaged in the commercial real estate business. It operates throughout the real estate and investment management segments. The real estate segment owns and invests in commercial real estate properties. The investment management segment structures and negotiates investment and debt placement transactions for real estate investment trust and manages portfolio for real estate investments. The company was founded by this guy, William Paul Carey, in 1873, and its headquarters, of course, in NY. So the valuation, we see PE ratio of 24 now. Comparing to the historical data, it was 44, it was 30. Now it's I think a little bit cheap. NPS ratio 10. 10, of course, it looks like a lot, but let's have a look on its cash flows, the revenue. So what we see for the last 5 years, the revenue continue to increase. Most probably here in 5 years it very close to that. We saw a double in its revenue. The marginality last data net income is 41%, net income margin and gross profit margin is 56. So as I see the profitability, it looks very good. Let's check the revenue breakdown. So most of its revenue the company of course make from real estate investment, and investment management give the company less than 1%. The breakdown by country, so US region gives 66% to its revenue, and international business is contained by 32%. Let's have a look on its dividend history. So we see this company WP Carey with the ticker WPC, dividend yield very close to 6%. The dividend increase track record 26%, 26 impressive figures. So actually it's a dividend aristocrat. The annualized 3-year growth rate is about 1%, and generally speaking nice dividend aristocrat in front of us. Let's have a look on its chart. So we see in my mind here last 10 years we traded in range the range from 56% to 90. So now we traded in the middle of this range. So most probably if the company may continue to show a nice results, if the net income will continue to grow, and of course if the dividend policy won't change, so it can be a very good probability to see the stock a little bit higher. And of course don't forget the 6% dividend yield. It can be very attractive for dividend investors. Let's have a look on the second stock for today. It's Albemarle Corporation. It's a lithium stocks. It's process industry chemicals, one of the lead stocks in this industry. So let's before check it the chart. In my mind here it was the second wave, the first wave, the second, the third. Most probably I'm expecting to see the third wave, then it would be the fourth, and then the fifth. If we'll check a little bit closely here, the first wave, it was the first, the second, the third. I remind you that usually the third is the largest wave in the angels. Here the correction wall, the fourth wave, it could be a triangle, so it's the fourth wave here, and then the impulse finished here. Then maybe we saw finishing of the second wave. It was clean ABC move, A, B and C. So then I'm expecting to see the third wave. So of course it's can be very large and big wave here. It of course could be much higher than the first wave. So in my mind here the growth potential is at least 100% from the current level. So by the way, there is the momentum indicator here on the weekly time frame is 37, so it's very low. It's telling us that now the stock already oversold. Let's have a look on its fundamental parameters. So market cap of Albemarle is 21 billion bucks, dividend yield is about 1%, the amount of employees is 7,000 employees. So this company engages in development, manufacture and marketing of chemicals for consumer electronics, petroleum, refining, utilities, packaging, construction, transportation, etc. The valuation here, we see that very low, by the way, valuation PE only 7, NPS of 3. So I can tell you that now for S&P 500 the average P ratio about 15, so here it was cheaper. So the valuation here is very cheap. We saw a bounce in its net income and revenue for the last year. And of course a very impressive marginality. Net income margin is 37, the gross 42, EBITDA margin also 38. So by the way, it tells us that the expenses for taxes and for interest are very low for this company. Let's check the breakdown of its revenue by segment. So most of the revenue of the lithium business gives to the company about 70% and then 20% bromine. By country, we see that China gives the most of its revenue. By region, by country is 1/3. On the second place, South Korea and other foreign countries about 17%. Let's have a look on its dividend history. So we see that dividend yield is about 1%. The dividend increase track record 30 years, so very impressive figures. As we see, it's a dividend aristocrat in front of us. Also, we may see that annualized 3-year growth rate more than 2%, and look here, it's very important figure, dividend payout ratio only 7%. So look, it's really very low. It means that only 7% from its net income company pays its dividends. So here the potential to increase its dividend payments to shareholders, in my mind, it's huge. 7%, it's really very low figure. So that's why, of course, Albemarle can be considered as a very important and great dividend stock portfolio, and also 3 years of dividend increasing. It's for me, it's quite impressive data. And also, if we look at the structure and the amount of debt, 3 years ago the amount of debt was 3.7%. For the last year it decreased 3.3%. And by the way, the free cash flow for this company also continued to increase. The free cash flow, the amount of free cash flow is about 60 million bucks. So now I remind that we are now in an environment of elevated interest rate. The Fed fund rate is now 5%. If the company decreases its level of debts, it's great. And also growing free cash flow, it's also a very good point for me. So Albemarle, maybe in the next months I will buy this stock. By the way, it's after the correction. Here the correction was already more than 40%, very cheap valuation, great dividend history. So why not to consider buying this stock? Actually, the technical analysis and momentum indicators telling us that also now it can be a very good point at least to consider this stock to your portfolio. The third stock for today it's UnitedHealth Group. It's a healthcare company. Its ticker UNH. Its dividend yield 1.4%. So here it's not difficult. Most probably last 3 years we traded in increasing channel. Now we are traded in the lower border of this channel. So there is a nice potential for this company to grow. Of course, let's have a look on fundamental parameters. Market cap 450 billion bucks. It's a great company, huge company. This company engaged in the provision of healthcare coverage, software and data consultancy services. The valuation PE 22, so actually it's very close to the median, to the average P ratio for last years, and PS is very cheap. PS ratio only 1.3. Actually, the average PS ratio for S&P 500 index now is around 3, so also here the valuation is cheap. For me, look, it's very impressive and great figures here. The revenue continue for this company to grow, net income grow, and of course please pay attention that the marginality for this company also growing. If 5 years ago it was 5.3%, for the last year it was more than 6%. Of course, it's not Google, not Apple. It's not a very high marginal segment and highly marginal business, but as for me, it's very stable. Most of its revenue, the company, of course, earn in the US, more than around 97%. And if we'll check, let's have a look on its dividend history of this company. So we see the dividend yield is 1.4%. The dividend increase track record is 13 years, and annualized 3-year dividend growth is 15%. For me, it's very impressive, and the dividend payout ratio only 30% is very low. So I think that the company may continue to pay nice and juicy dividends to its shareholders. Of course, UnitedHealth has a debt on its balance sheet, but look, the debt to EBITDA ratio only 2, interest coverage 11, so it's supposed to be higher than 5, and I don't see any problems for that. Look at the cash to debt ratio is 66%, so actually more than half of this debt can be paid just with this cash. If it's all the debt amount, look here quarterly, yeah, it's important for me. The debt amount is 70%, but the cash position is 45, so few quarters and at least half of his debt can be paid directly tomorrow with cash. So any problem with cash, the total financial position is 7 from 10. So for me, for UnitedHealth, it's a great financial position. So generally speaking, what I think, UnitedHealth, by the way, down its performance this year is down more than 8%. This company continued to increase its dividend payment. It's a steady pace for 30 years a row dividend payments, and of course now it's down actually from its high levels. Yeah, we see decreasement about 12%, so maybe it can be considered a nice time to pick this stock. By the way, lower border here, so I can tell you even the growth potential here about 25-27%. So it's my view for UnitedHealth Group company. And another bonus for me, another stock, it Williams company with a nice great dividend yield, more than 6%. It's ticker WMB. It's, if I'm not in energy, mineral, integrated oil. So look here, by the way, it's very interesting technical analysis. It could be the first wave, the second, the third, the fourth, may finish here. It could be ABC move, so I'm expecting to see the fifth wave. The fifth wave usually higher than the third, of course. So in this case, the growth potential is more than 30%. Also, it looks this scenario very the probability also increased. Look, this third wave can be reflected in this wave. So now give me 1 minute, I will show you my drawing. So it could be here the first wave, the second, the third, most probably here it was an NBC move, and it was, yeah, so I guess it can be this wave. So the first wave, the second correctional one, the third, the fourth, it was ABC move, A, B and C, and the last wave, the fifth wave. Here, by the way, I remind you that usually the correctional wave, the second and the fourth, they are changing. One of them is flat, one of them can be sharp. So here it's very sharp, and here just like a range, it's a flat one, ABC move. So most probably this drawing is it could be this probability is very high. Of course, it's my opinion, it's just my thoughts. Let's have a look on its fundamental parameters of this company. So Williams companies, its market cap $35 billion. It operates as an energy infrastructure company which explores, produces, transports, sells and processes natural gas and petroleum products. It operates throughout the following segments: transmission and Gulf of Mexico, Northeast, GNP and West. So it's connected to the Mexico segment. Its P ratio is 17, PS 3, so not something special, not expensive, not cheap, but I think by the way, it's fairly varied company. Its revenue, we see that it grow for the last 5 years. Also the marginality 15% is quite good, and the net profit margin is 18, so I think it's quite enough. And let's have a look at its breakdown by revenue. So most of the revenue gives the sector of gas and natural gas liquid marketing services and transmission and Gulf of Mexico. It's on the second place, and most of the revenue company earns in the US, of course. And the dividend yield here very close to 6%, and if I'm not mistaken, yes, for last 5 years at least, the company increasing dividend payments. So the dividend per share are continue to be increased. So very great data for the dividend investors. So this company, this stock with the ticker WMB, it was my last, the fourth actually, the bonus company, the bonus stock for today. So generally speaking, it was today 3 stocks: WPC, ALB and UnitedHealth with the ticker UNH. If you're interested in dividend investing, stock market analysis, fundamental technical analysis, so don't forget to subscribe to my channel, and of course see you the next time. Bye.